going on, fellow traders? This is Mike Spencer with MTTS Trading, coming to you on Sunday, May the 5th. Happy Cinco de Mayo to those who are celebrating. We're going to make this part of the Spotlight series. Just take a minute to look at one of the previous watch list items that we had, which was ALGN, a line. We put that on our watch list back on January 22nd as a weekly watch list item. And if looking at the chart right here, our buy signal came in right here. So we did have a buy signal here. This is what we would call maybe our early buy signal. This will be a confirmation buy signal where it's crossed our moving average. And the thing about this one was it had already been on a huge climb. The last strong buy signal we had was way back in November of 2016. And you see what it's done since then. It never did come back and eclipse or close below our secondary moving average until right there around October of last year, 2018. So this was a nice setup. It came down, it hit off this support. We had some consolidation here and eventually broke out to the upside. But this was a strong support area. When we come into it, started watching it, we did get our buy signal and executed it the following day, the Monday, January 22nd. So, and since then, you can see what it's done. It's, you know, our entry would have been at the open on 121 or 122, which would have been around 220.68, and it closed on Friday at 331.08. That is just about, just right at 50% move in a matter of 5 months or 4.5 months. So it's a great trade. The other thing I wanted to point out on here is that we did have a question from one of our subscribers, one of our strong members. He'd asked a question about how to use trailing stops. I had mentioned trailing stops after the question came up. I'm not sure always when to get out of a trade. I feel like I get out too early. Just they weren't quite sure when was a good time to do it. And of course there's many ways to do it. One way is to just go by the moving averages as you see on our chart here. You know, once we enter this play and we keep getting climbed, you know, it keeps climbing up all the way. We get up above the secondary moving average. We get the cross here, which is another great confirmation that it's going to continue to go. But while it's down here, while the primary moving average is below the secondary moving average, we pretty much have to use what I would use as a trailing stop. And when we're talking trailing stop, I'm referring to using previous pivot lows, or in this case it's a long trade, so looking at the previous pivot low in order to put your stop. So if we're looking at the entry week of this stock on a line, this is the week we enter right here, and like I said, it was at 220.68. So the first thing you do, especially if you're going to swing trade this and hold it for a while, is you want to look at the previous low. Well, the previous low was where it bounced that last time. So you look down here at 177.93. Obviously, a line has a pretty good ATR, average daily range. I'm sorry, ADR, average daily range. So you know, giving it 5 cents is probably not real smart. So you probably want to give it a wiggle room of 50 cents or $1. I mean, if this is a swing trade and your position size can afford to give up 50 cents or $1 more, or just position yourself or size your position based on the amount of wiggle room you have to give it. But nonetheless, that 177.93 was that low, so I'd almost say put it down around 177. You could put it at 177.50, but that'll give you plenty of wiggle room just in case it would quickly drop back after this, if it dropped back real far. So as you can see, let me mark these here real quick. So when I am referring to previous pivot lows, we're talking about right here. Do that one, and then the next one is right here, and now the next one is right there. So far we have 3 pivot lows, and when we refer to pivot lows, that's just it's a higher low is what it is. So in this weekly trading, it's easier to see, and that's one reason I'm using a weekly chart. You can see that the tail came down here, gave us a higher low here, and we continued to trade higher, and of course it's going to pull back some, so it created another higher low, another pivot, and continued to trade higher before it decided to pull back for a couple more days, and there's another higher low. Now there's a couple ways to play this that I've learned over the years. One way is that if this was your entry, your first stop would go down here at 177. Let's call it 177. Excuse me. And after it continues to trade higher and then comes back down here and creates this next low, and then the next week, in this case the next week, it trades higher and does not. So this has to maintain. So you have to wait till the next week to know that this is your new higher low. And when you get here, there's 2 ways to play this. You can either move your stop right up to your previous low, or you could move it up to the higher low, which is the way I would play it. So each time it creates a new higher low, you move that stop up to here. So that's what we're calling a trailing stop, a pivot trailing stop, not one that you set automatically in your trade to just trail the price by $10 or whatever it may be. But in this case, it's just waiting for the next higher low to be created, and then move your stop up to the previous one. So you're always going to be 1 pivot low behind the current price after one has been created, after a new one has been created. So it would move here, and then once the price moves up to here and comes back, and then this week confirms this is the new higher low, then you would move your stop to here. And that's just the easiest way if you don't want to pay attention to it, if you don't want to worry about it, if you have a lot of other trades on, a lot of other swing trades, and and you can't sit in the front of the computer all the time. That's one way to do it. If you get to the point to where you're feeling comfortable with your trade, you can take off a third, a half, a quarter position, whatever you may hold. If you hold, say, 4 contracts or 400 shares, you could take off after this one hits and starts to go higher, and then comes back and stops here. When you move your stop up, take off quarter position, take off 100 shares. When it comes up to this one, move your stop up here, take off another quarter position. You can take off the size position you want, or you can close the whole thing. But the key is here is that as you keep on moving this allows you to stay in the trade much longer, as you can see here. We all get antsy, especially if we see a bar like this. Looking at the daily chart, that might have freaked us out at the time. And let's see when that was. That was back in March, beginning of March. Go here to March, somewhere around in here. Yep. So we see this. We had a gap down. Had a gap down here, coupled in high volume. So that might have freaked us out. We might have said, nope, I'm out. But if you go back to the weekly, in this case, the previous low held, and you're still in the money. Well, in this case, no, you weren't, because your entry was here. So at this case, in this case right here, after this low was created, then you move this stop up to here, then you're still not in the money yet. That's why you want this to continue to go higher. And when it gets up here and stops here, then you can move that stop up to here. Well, in this case right here, your stop is above your entry. So at this point, you're green, but you might choose to follow each day at that point. There's a low, there's a low, there's a low, and it would actually trigger, there's a low, and it would trigger out on this day. So there's many ways to do it, but depending on your, and you can do this on any time frame, but you always just want to use either one previous low or two previous lows. If you are into long-term trading, two previous lows is probably better, just to avoid the price fluctuations that you'll get with a lot of these higher price stocks, especially such as Align or Amazon or Google or any of those big name tickers. But in this case, we start looking at all the other signals. They did have earnings report 2 weeks ago, and they look good. So one would only assume that they're going to continue higher until, and right now they're coming into some resistance somewhere around 340 here, but really the next big resistance is up here at the 395 mark or 400. So I look for it to go at least up to 375, but again, it's all in your preference and how you want to exit the trade. If you're green, make sure you stay green, because our entry again was 320 or 220 area. You could move your stop up to 50% of the move right now, which will be about $55, so to around 275. So it'd almost be this previous low. So just in a nutshell, that's all that is. And like I say, you can obviously use that on any time frame. If I go to a 15-minute chart and you're using previous pivot lows, you obviously can come in here and do the exact same thing as you're going up. You say you're here, and there's one previous low. Well, if I can get it to do it, and there's another one. There's another one. Yeah, this one's a little minor one, but it's still one. So then you start to come. Then price starts to come back. Here's another previous or another higher low, but then at that point, that's when you start to see that, okay, I've hit it. You should have technically stopped out here unless you had wiggle room. If you had wiggle room on this one, you might be down around let's see what the low was there. The low was 323.17. So if you had your low at 323, or let's go with the 5-cent rule and say 322.95. Then the low here is 323.08. You would have still been in the trade. So that would have created another pivot low. Another pivot low. If I can get it to do it. Another one here. And obviously this area right here would have been where you would have exited the trade based on the big candle going through previous support or previous pivot low. But that, in a nutshell, like I said, is one way to trade pivot lows. How to stay in trades longer. The other way, and I'll do another video about that soon, is how to stay in the trades longer by using our proprietary MAs, our moving averages. So until next time, happy trading. Good luck.